I mean, Bitcoin's the best performing asset over any time frame, 15, 10, 5, 3, maybe not the last 10 months. But, for me, it's sort of like starts at Bitcoin, some of the Bitcoin treasury companies, the micro strategies. And then if I was going to go out from there, probably a little bit of commodities, gold, thing like that.
The Bitcoin and crypto markets have seen in years an event so violent that it triggered the largest liquidation cascade ever recorded. And while fear, panic, and uncertainty continue to dominate headlines, Mark Moss brings a sharply analytical perspective that cuts through the noise.
Bitcoin and gold, right? Sound money, the debasement trade. I think that's the place to go. I would probably say other commodities. So, for me, it's typically things that really can't be printed, right? Alternative investments. So you start to look at the reindustrialization of the United States, this race to build commodities, these strategic minerals here in the United States. I think there's a good base case for commodities overall, gold and Bitcoin. But, from my standpoint, I mean, Bitcoin's the best performing asset over any time frame, 15, 10, 5, 3, maybe not the last 10 months. But, for me, it's sort of like starts at Bitcoin, some of the Bitcoin treasury companies, the micro strategies. And then if I was going to go out from there, probably a little bit of commodities, gold, thing like that. For when the liquidity is coming back in, I think number one, I mean, we look at the Fed's ending QT December 1st and most likely starting QE again. I think that's really big. Number two, we'll start to look at those rates coming back down. I think that's going to be really big. And then I think we'd continue to look at a lot of the spending that's happening as well. So keep an eye on all the major central banks. Keep an eye on those liquidity levels. We can see that in the U.S. specifically, sort of this liquidity levels have been dropping, as I said, because the government's been shut down, things like that. But I think all that's reversing. I expect it to be pretty strong and pretty bullish through next year. Well, I'm going to quote the Oracle of Omaha with this one. Yeah. And what he would say if he was here talking to you today is he would say, don't buy anything that you wouldn't be okay holding for at least 10 years. That's what the Oracle would say. The Oracle would say, what he said is, I don't buy stocks. I buy companies that just happen to be trading publicly. So he would say, understand what I bought, and value is what you buy, price is what you pay. Don't look at the short-term price. You're driving yourself crazy. Okay, that's what he would say. Now, how would I answer the question? I'd say I'm gonna approach it from two different angles. What Mark Moss personally thinks about, and then how I think about it as a partner at a fund that we have to manage other people's expectations. So from the personal side, I agree with the Oracle. I'm buying stuff that I'm okay to buy for 10 years. I look at short-term dips as buying opportunities, and I keep buying. But from a short-term basis, you said people are afraid, options are expiring, they're blowing up, things like that. They see potential risk in the market. From the fund side, the Bitcoin Opportunity Fund, we have to manage other people's money. And we do have to think about our performance on a quarterly and on an annual basis. And so from that perspective, we're hedging a lot of our positions. So we're long, right? We're long Bitcoin and Bitcoin companies. But at the same time, when we're seeing, like right now, we're looking at a lot of the potential risk in the AI sector, for example, with OpenAI. And so we're starting to put some puts in there, some hedges, using options and other strategies like that to hedge our position. Now, that will dampen our upside, but it also limits our downside volatility. So if I'm that person seeing this risk and I'm worried about what that could do to my portfolio, I'd want to think about the time frame of my investments. And so money that I'm going to need shorter time frame that I don't want to stomach the volatility in, I'll probably want to bring that into some safer investments that have lower volatility, some better fixed income type assets. If I do want to stay long on some of these more volatile assets, I'd want to lower that volatility by hedging my positions using options and other strategies like that. Well, what happened is you have these major market makers and blowing up. And so then what happens, they have to unwind these positions. And I saw this chart this morning on Twitter. It looks like every single morning at 9:30 a.m. Eastern, a big seller is coming to the market and dumping Bitcoin into the market. And so what that is it's structured selling. Somebody's trying to unwind a position. Healthy markets wouldn't do that. And so somebody is showing up every single day, dumping. And what's interesting, if you look at some of the on-chain, or not on-chain indicators, but more of like the technical analysis indicators, we can see the lowest daily MACD in history. Now, what's interesting is it's the lowest MACD in history, but Bitcoin's only down 33% from its all-time high. Now, only 33%. What do I mean by that? Well, if you zoom out and look in this bull run that we've been on since about 2022, when Bitcoin was down in the but it was about 16 to 20,000 range. This is the third pullback of about 30%. So 30% drawdowns in Bitcoin are kind of somewhat normal. In other bull runs that we've seen in the past, like in 2017, we saw 7 of them happen. And so while it's only down 33%, not 80 or 90%, the MACD is at the lowest point in history. We see RSI at 21. It's only been that low 4 times in 5 years. We're talking the COVID crash, the FTX collapse, but like we're nowhere near that, right? We don't have this macro shock going on. There's no credit event going on. And like I said, Bitcoin's only down 33%, which is sort of in line with it. And what I would say, we can talk about more, but what I would say is that when you see this forced selling, a fund is being forced, this distressed market makers being forced to unwind this position, I would look at the opposite and go, man, the market is absorbing that and scooping that up like a boss.
The largest liquidation event in crypto history, Bitcoin barely flinched in structural terms. For Moss, that's a powerful signal of underlying strength. Looking forward, he sees the end of quantitative tightening, a new global liquidity cycle, and continued currency debasement as the ultimate drivers of the next bull market. His view remains clear: Bitcoin, gold, and scarce commodities are the real winners in the years ahead.
So I look at this market personally, how I think about it personally investing into it, but also as my fund has to think about it. And so those are 2 different hats, and we approach the market 2 different ways. First of all, we can get back to that. But and to answer the question, yes, it does appear that the price action, the short-term price action, is hostage to the market. I don't think it means that the asset is a hostage. So what are we talking about? Sort of what you said, it's a plumbing issue. So what happened, I think, is leading up to what really caused this to happen. We'll get into that, what Fundstrat said. But since the ETFs went live on Bitcoin, we've seen the volatility collapse. In order to overcome that, what we've seen is that the trading has become over leveraged in Bitcoin and the crypto market overall. And so we've seen this massive buildup in leverage because that volatility has been lower and the complacency was high. So you sort of have that buildup. Then what happened is on October 10th, 10/10, Trump put out one of his tweets that likes to move the market, and he said he was going to slap 100% tariffs on China. Just like we saw in April, that sent the market reeling. The market started collapsing. And what happens, because 1, we have the over leverage, as I already said. Number 2, we have so much of this algorithmic trading going on. So as the market starts moving down, it starts sending a cascading event, and it created the largest liquidation event ever recorded. About $20 billion in leveraged positions were completely wiped out in less than 24 hours. It hit about 1.6 million accounts. And normally that would happen from, massive macro shocks, something like that. An exchange blew up, something like that. But that's not what happened. It was to the point that Tom Lee made, you brought up, a major market maker blew up. And so we've seen a couple of them that have actually blown up. Looks like Wintermute maybe went down. Maybe another exchange went down. He doesn't really want to name them. But we started seeing this liquidation. And what happens is you have something called ADL. It's automatic deleveraging. So what happens is as this liquidity starts to dry up, these accounts, looks like Binance being one of them, started to liquidate or close people's positions, even though they're in profit. So it closes positions indiscriminately, and it's taking the profitable trades and sort of socializing the losses, if you will. And that's exactly what we saw. We saw the other account, I think what maybe he didn't want to name them, but it looks like Stream Finance. That's a major delta neutral fund. They're about 200 million AUM. It literally blew up because of this ADL cascading. And so that seems to be what happened. It was like this anomaly. It was the plumbing. He calls it a glitch. I don't know if that's the right word for it. It's just the way the system is built. We probably need to take a look at that, rethink how that is. But that seems to be what happened. So, I mean, my overall position, and again, it depends on what time frame you're talking about, but I'm bullish on assets because I believe the governments will always have to print money. Now, to your point, there are some dangers that we see in the market. We can certainly hit some more liquidity pockets. We could certainly trip some more circuit breakers like we saw here, and we could see some selling, but I think any type of selling that we'll see in the market overall broadly will be swiftly met with more money printing and more stability. So I think any type of, maybe black swan or gray swan events that might trigger some liquidity crisis in a broad general market sell-off event, I think will be swiftly dealt with by the Fed. And so we'd see like this very rapid V-shaped recovery. In my opinion, it would be so fast, I'm not going to try to trade that position. Again, because I'm a little bit longer term, I'll look at that as a buying opportunity. But if I'm shorter term, then I might want to reduce my exposure in some of these areas where I see some risk, like the AI stuff. I might want to hedge some of my positions if that's the case for me.
The largest liquidation event in crypto history, Bitcoin barely flinched in structural terms. For Moss, that's a powerful signal of underlying strength. Make sure to like, subscribe, and stay tuned for the next video. Thanks for watching.